It's about that time of day again. My name is Joseph, Thursday evening, March 22nd. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's session. And I'm going to cover crude oil, S&P, Nasdaq, gold, and euro. Starting off tonight on oil, crude is bearish as it tries to take back yesterday's gains. But the choppy price action this evening is telling me to focus on failures and traps up at resistance levels tomorrow morning. The S&P is also bearish and finished the session smack on its lows. That tells me to look for selling opportunities anytime we get back above that moving average on Friday morning. Speaking of Friday, Nasdaq is bearish to finish up the session with a strong move lower, and I have my eyes on a hidden channel for selling opportunities tomorrow morning. Gold is bullish with a flag pattern. We're not quite there to the bear side yet, and that tells me to look for buying opportunities using seller failures up above the high of the channel tomorrow morning. I'll tell you, gold has a remarkably good opportunity for us to the downside tomorrow, but we're not there yet, so make sure you stay tuned for more on the gold. Euro is bearish with a beautiful spike in channel pattern of its own, and that tells me to look for selling opportunities up above the high of the channel tomorrow morning. Boy, we are ready to wrap up the fourth week of March. I can't believe how fast this week just flew right by. Got a big Friday session setting up for tomorrow. We saw some real great trends, some tight, narrow ranges, and I got a great video and a great plan for Friday's session. Before we jump in and put the plan together for Friday, I do want to remind you, if you're watching on YouTube this evening, you can find a detailed description of this entire strategy written out here on my blog at sidewaysmarkets.com. I'll put the link in the description of the YouTube video. If you have any questions about anything covered in this video, please remember to post them in the comments section below the YouTube video. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything that is School of Trade, don't forget to come over here to sidewaysmarkets.com. This is our trading blog. I'll put all the links in the YouTube description. And while you're here, make sure you join our mailing list. I'll send you an email anytime I post a new video that's related to our trading strategies. Also, don't forget, while you're here, follow me on social. Lower left-hand corner, I'm always posting exclusive content, charts, links, and updates throughout the week. Follow me on social for all that exclusive content you won't find anywhere else on the interwebs. And speaking of charts, how nice is this? All the charts from tonight's video, that's right, all the charts from tonight's video, you can have them on your computer for tomorrow. Follow that link that allows you to download today's charts and be ready for tomorrow's session. And speaking of tomorrow's session, upper right-hand corner, before you finish your day today, make sure you grab that free pass. If you're not a member here at School of Trade, grab that free pass. Come on, join me as a guest in the trade room and learn more about our trading strategies with me as a guest in the trade room. All right, guys, introduction is out of the way. Let's dig in, roll those sleeves up. We got a big day setting up here for tomorrow. Tomorrow's Friday, March the 23rd. Now, of course, a Friday session always tells me two important things. First, early in, early out, right? Early in and early out. That's the first thing I always talk about on a Friday morning. We know that as the week gets later in the week, traders take bigger risks. At the same time, volume starts to dry up as big lot traders start scaling out of positions ahead of the weekend. So early in, early out. What I mean by that is that my plan is always to find the best trades in London and the U.S. session, but as of 11 o'clock Eastern time, I'll leave any runners, I'll leave the trade open, right, remove the risk, but as far as adding more risk tomorrow after 11 o'clock, be very careful getting into new positions late in the session tomorrow. The second thing I want you to remember for a Friday session are those prior week open, high, low, close levels. Prior week open, high, low, close. That means last week's open, close, high, and low with a real focus on the closing, the high and the low prices. The opening price not going to be as important. It's the high-low close levels of last week. Now, of course, the E-minis wiped all those out with a big drop today, but we got some real opportunities on oil, on gold, and on euro to use those prior week levels as nice, big, juicy targets for tomorrow. So make sure you stay tuned on those charts as we go into the chart worksheet, right, in just a few moments. So early in, early out, prior week open, high, low, close levels, those are the two major components of a Friday session. And then, of course, taking a look at the news on the schedule for tomorrow, we got quite a bit of really important news tomorrow. We get the durable goods orders at 8:30 and the home sales number at 10 a.m. Both of these are expected to be market-moving events, so keep your eyes open. Nothing in the overnight London session to worry about tomorrow. We do have that big news number at 8:30 Eastern Time. That will crack open the brand new the U.S. morning session after 8 o'clock Eastern Time, and then 10 o'clock. Boy, I'm looking forward to 10 o'clock tomorrow morning. 10 o'clock tomorrow morning should have some fireworks. We always expect to see what we call the 10 o'clock shock, and we always love it when we combine 10 o'clock news along with some home sales numbers. So definitely expect some fireworks tomorrow, early and mid-morning. And then again, around 11 o'clock, you want to start making those tough decisions as far as eliminating extra risk, right? And, of course, going into the weekend. Enjoying a good weekend, and we'll come back and do it again on Monday. So that's the plan for Friday morning, tomorrow morning. In the meantime, let's jump in and look at these charts here now, because we got a lot to cover here from today's session. Lot of action. I warned you all last night, right? I warned you last night. The day after FOMC is usually where the big moves happen, and that's exactly what we saw in today's session. Crude is bearish. Starting off tonight, we got crude oil. We'll go S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Gold and euro have some really interesting charts, especially that gold chart, so make sure you stay tuned on that until the end of the video tonight. Crude is bearish with a spike in channel and a relatively choppy price action to finish the session. We can definitely see the bears have control, but look closely and you can see the only successful selling opportunities have been traps and buyer failures up above the moving average. So my plan is to keep following that lead into Friday's session. We saw a big, strong move down. By the time we came in this morning by 8 o'clock Eastern Time, right, we're looking at this as clearly a bear market. It was really choppy on the way lower, but look closely. Every time we get above that swing, get above that swing, get above that swing, notice how every time we go lower, right, the pullbacks are failing, but the traps are successful, right? Pullbacks are failing, but traps are successful. Those buyers are kicking and screaming right now because remember, as of yesterday's move, this is a big monster bull day. So as we go lower, we're going to start seeing more of those buyers start to bite the bullet, get out of their positions, and the market will likely keep grinding lower. That's what this usually feels like, and this is a situation you want to really learn to identify. Anytime, for example, anytime on Wednesday we see a big up day, and then on Thursday morning in the overnight we see that reversal, you know it's going to be kind of a grindy day because nobody's selling down here. What's happening is it's the buyers from yesterday that are kind of holding on as it keeps hitting stops and hitting stops and hitting stops, right? All these stop losses sitting below these prior swings, running stops, running stops, running stops. So our plan for tomorrow is we're going to focus on the sell side because the bears definitely have control, but I'm going to follow the lead that we saw late in the day today, and that was trap high sell, trap high sell, trap high sell. So that's the ultimate plan for tomorrow. Big targets now down around that 63.30, 63.60 area, right? That yesterday's low, excuse me. So that's going to be the big target for those bears for tomorrow. And then possibly making a dent into some larger moves, right? Down to this 61 area, 62 area, right? As we go into tomorrow's session. We'll have to wait and see how far this thing wants to go here tomorrow. But for right now, I got my eyes on yesterday's low around that 63.60 area. So now that we know the overall personality of it, we know direction, we know the overall goal for the sellers, how do we get into this thing? Well, again, as we saw it go lower, we keep looking for traps overhead. I have a channel lined up. That's going to give me a level of resistance to work with. In a bear market, I want to sell at resistance rather than selling at support. So I've got a bear channel looking for that as resistance. I'm also lining up that low to these highs. That's a beautiful level of resistance to use tomorrow as well. So up and back down there. I'm also watching this measured move here. This measured move at 64.08 is a definite concern as a major level of support. So again, got to be careful as the market goes lower. I'm looking for traps, right? Chances to get above that moving average and sell back down to retest that low. So what if price goes up? What if price goes down? And what if price goes sideways? Let's get ready for all the different options for tomorrow. Now, if price goes higher, this becomes relatively easy. Get that moving average over, trap high, failure, back down again. Maybe we see a little bit more dramatic move. Maybe we get a two-legged pullback up, failure, strength, pullback, back down again, right? And we get that tomorrow morning. Bottom line is I've got my eyes on resistance level, resistance level, resistance level. I want to get up, see those buyers fail, and then run this sucker back down to retest that low. That's the plan if price goes higher. If price goes lower here tomorrow, we got that measured move waiting. Price goes lower, we get to that measured move. We almost always see a two-legged pullback and a sell back down. That's the plan if we bounce off of that measured move. Most of the time we see a measured move, we're going to bounce on profit taking. Moving average comes over. Buyers try to buy the pullback. Failure into pullback and back down we go again. Same basic pattern, just this time stay patient for the bounce. If we continue going lower, right, and we don't see any relief from that measured move, not to worry. Measured moves get ignored sometimes during strong moves. On the way down to that 63.58 area, find those traps and continue to look for selling opportunities up off that level of resistance. So even if price continues to push lower, and even if it looks like it's never going to stop going lower, I'm still going to wait to make sure I sell at resistance, because just because the market looks like, for example over here, it looked like that market was never going to stop going higher, right? But as long as you focus on buying at support, you stayed away from trouble and were able to see the turn and make a profit accordingly. What if we go sideways here? There is potential we go sideways here around this measured move. If we do see this down, up, down, if we see a double bottom here on oil, double bottoms are always what give away a sideways range in a trending environment. If you see that double bottom, that tells you now to look for selling opportunities up above the high of that range. Try to use buyer failures, one try, two try, and back down into that range tomorrow. Remember, everything I'm covering here, I teach in our video classes, and we trade every day in our trade room. So if I'm going over this and the terminology doesn't make any sense, it's understandable, but of course I call it the School of Trade because I'm going to teach you all of these tools, right, as a client of mine in the trade room. So don't forget, if it goes sideways here at the measured move, wait for that bounce, wait for buyer failure, and sell back down. Last but not least, how do we reverse tomorrow? Well, we knew the buyers had control last night. How did they reverse it? Strength, pullback, strength, right? That was all they needed. In fact, they got it right here. Strength, pullback, strength. That was when we came in this morning at 8 o'clock, we knew there was no way this market was bullish anymore. We're going to see the same thing for the bulls. Strength, pullback, strength. What will happen is there'll be a strong move up. The buyers will hold the pullback to the moving average, but more importantly, they'll jump up above that high, and basically the sellers will start getting out of positions. That will throw fuel on the fire, and the price will run higher. When that happens, draw that new channel. Don't buy high, buy low. Looking for that buy now coming off of the low of that channel, and the target is back up to retest the high. So is there a possibility the bulls could take control tomorrow? Absolutely, there always is, especially on a Friday morning when anything is possible, right? But we have to see some proof before we get there. So easy plan there on crude. All we need now is a move up off these lows and be looking for those selling opportunities, traps, failures, right, for a move back down. Speaking of a move back down, boy, how about those E-minis today? S&P is bearish with a strong move lower, but it looks like we're starting to see sellers pause a bit at today's low. This gives me the opportunity now to look for selling opportunities up at that reversal line overhead and the channel high waiting above us. We may also see a bit of a hidden channel here as well, so keep an eye on that also if we don't finish up this move down to that channel low. I think the most important thing right now is we got a key trend line coming down off of that high. And as much as I would like to think we're going to get that perfect sell off of that, probably not going to be that clean. We'll probably end up seeing something like this where it tries to hold and collapses back down. But again, I'm looking at that key trend line overhead as a major objective, right, for my selling opportunities tomorrow morning. We can also see we have a reversal line, that 63.25 area. We have a prior support level which can be used as resistance tomorrow as well. And wouldn't that be lovely if we can combine that reversal line along with that trend line to now really jack this thing up and give us some nice strong levels of resistance to sell off of tomorrow morning. One thing that definitely concerns me, and it's not a huge surprise, is to see as we finish off that move today, we're starting to go sideways here, right? So this may end up going sideways into the range tomorrow, and if that's the case, up, back down, just keep selling high up above that range for tomorrow morning. Now, measured move is a big target. Strong leg down, pull back, and go. That's the only real measured move that I think is going to be applicable here right now. You might be thinking, well, what about this one? Well, we went through that one. It's just not a... doesn't look like that small measured move is what they're really looking for here right now. So we're looking at that larger measured move around 28.75. We'll call it 26.30 even, right? Just do some big round numbers. So the bears have control. One of the most common questions that I've got today in the office is how far will this thing go? How far can we really take this thing? Well, to give an idea of how far this market could really tumble here, go out to your 60-minute chart, zoom out a little bit, and you can see the prior month low. Where is it? It's all the way down there. So prior month low is all the way down at 25.34. That's a big chunk lower here, as you can see. We're only, when you look at this range, we're only about halfway there right now. So how far could it go? Yeah, 25.34 is a good number. Is it realistic for tomorrow? Hell no. Most likely not going to see this market drop another 15 points, right, tomorrow morning. Might happen. Possible, absolutely possible, but probable, not that probable at this point. So maybe we get that big drop down to that prior month low. I hope we do. It'll be a great day because of it tomorrow. But in all reality, when somebody asks me how far can this thing go, I always tell them when the market's trending, you're looking for channel rotation, measured moves, and the most important thing is it really doesn't matter to me how far this market can go because that's not my priority. My priority is where do I get in? Where can I find an opportunity to sell at resistance where I can have a small amount of risk with a big amount of reward? So seeing that we have that big measured move target still waiting, I know that that is all I really have to worry about right now. Could the market keep going below it? Absolutely it could. But let's not bite off more than we can chew. We know we have that big monthly low at 25.34, right? But again, right, it's almost 15 points lower than we are right now. So it's unrealistic to expect that, right, to happen in one session tomorrow. So worry about what you know will work right now. Channel rotation and measured moves. And most important thing, all I really care about is can I get up off of these lows, because that's where I'm going to be finding selling opportunities. It doesn't matter where we might go. All that really matters to a real trader is where can I get in so I can be part of this market. Because I can always leave a runner. I can always leave an open contract to run, right, and just trail my stop and lock in as much profit as the market will give me. But worrying about how far the market will go right now is a complete waste of your energy. What you should be worried about right now, at least in my point of view, right, is where can I get in at resistance so I can use a small amount of risk and hold a portion to run. Because trying to predict how far this thing will go is a fool's game, right? Don't waste your time on that. Just get into good trades, take a quick first target, leave that runner, and let her rip. You never know what you're going to get. Don't waste your time trying to predict. So right now, we definitely are watching that measured move on the way down. We're definitely watching this channel low on the way down. But again, the most important thing is, where can I get in at resistance so I can take a quick target, eliminate the risk, and hold on to that runner? And that definitely comes up at the top of this channel. Would love to sell up around that high. So how would that look for tomorrow? Well, obviously, it'll go above the moving average. So what if price goes up? What if price goes down? And what if price goes sideways? Looking at the chart a little bit deeper, if the market goes higher up into that level of resistance, that will be a dream come true. I'm looking for a buyer failure. That buyer failure oftentimes leads to strength. That strength leads to a pullback back to the moving average, and we make a run right down to that measured move. Want a good example of that? Good example of it was right here. Strong move up, buyers failed the moving average, strength going lower, pull back in, back down we go. Relatively easy to see that pattern, and you can see, right, that's the forecast for tomorrow as well. Where can I get in at a level of resistance in this bear market that will allow me to take a quick first target and then leave that runner, because who the hell knows how far this market will potentially go. Measured move is a short-term objective on that, right, as we go back down to that low. What if we go sideways here? If we go sideways, if we start seeing double tops and double bottoms are really the most important. I want to go up, 1, 2, let those buyers fail. As those buyers fail, 1 try, 2 try, we're looking to sell back down into that range. Again, try to find a way to incorporate that level of resistance with that move for tomorrow. And what if price keeps going lower? What if it keeps going lower? If we keep grinding lower here, do not sell low, wait to sell high. I like to use traps if the market won't pull back. If we see this market won't pull back to the high of that channel, wait for sell up at resistance, find those trap highs, and finish off that move down to the measured move. Last but not least, how do we reverse? It's definitely possible, not probable, but highly possible. Anything's possible as long as we keep our eyes open. What do we need here? First things first, strong move higher. Got to be real strong. Second thing, right? Got to hold that pullback and explode higher, right? Hold that pullback and explode higher. You can see what happened earlier on in today's session. Strong move up, pull back. Did it explode higher? No. And once we saw it pull back to that moving average and collapse, you knew this is just, right, a head fake from those buyers. We need to see those buyers come in and show us some strength tomorrow morning if we're going to call this a bull market. And if we do get the bull market, usually what happens is we get that new higher high, mark that up for a new hidden channel, and I'm looking for that buy coming in off of that low. And if we do get that long side to work tomorrow, we got some big targets waiting up overhead right at yesterday's high. Again, not very probable right now, but definitely possible. Tomorrow's a Friday, so anything can happen. But again, right now, rather than worrying about how far we'll go, worry about where can I get in at resistance, where I can have a small amount of risk and leave a runner for a substantially bigger amount of reward. Let's keep going. From the S&P over to the Nasdaq. The Nasdaq looks the same, but it's a lot different condition than the S&P is. So we have a little bit different plan here on the Nasdaq. Nasdaq is bearish with a channel and a possible hidden channel to work with tomorrow morning. This strong move lower is a big clue, telling me that conservative sellers are most likely going to be waiting for opportunities up above that moving average tomorrow and with a target down at that measured move. Now, in this example, we got multiple measured moves to work with, right? So 1 leg, 2 legs, minor support here at 74.5, right, on the way lower on the Nasdaq. Take that a little bit wider, right, and you get that major measured move. My gut tells me that major measured move is going to be the big target, right, for tomorrow because it lines up right with that channel. You'll notice that channel down to those lows. Measured move really seems to line up nicely right down to those lows. So I've got my eyes on this 67, 66.08 area, give or take a few ticks there, right, for that major target for the bears tomorrow. The one thing right now that kind of spooks me is the fact that if you line up these two highs, they really connect well with these two lows. So as I see these two lows here connect to that high, we may see a hidden channel here form. How do we know if it'll be a hidden channel or not? Well, we're going to know right away once we come back and test that trend line. Assuming we go up and test that trend line, if we don't see this failure off that trend line, in other words, if they hold and go higher here, now we know that level of resistance now comes into play and be looking for that sell back down. Once again, just like the S&P, don't worry about how far it can go because I'm not trying to sell low. I'm trying to sell high. Right now, the only focus we should care about is how can I get in at a level of resistance so where I can put a small amount of risk for the opportunity to earn a substantially bigger reward. Start off looking at resistance levels such as that trend line overhead. What if price goes up? What if price goes down? What if price goes sideways? If we go up to that trend line, moving average will be below it, looking for a buyer failure into strength, into pullback, and then down to that measured move. Again, buyer failure into strength, strength into pullback, and finishing off that move down to the low of that channel, right? What if we go further? What if we go further up into that hidden channel? The pattern stays the same. Buyers try to come in. Buyers will try to reverse that trend. So don't be spooked by a strong move higher. Wait for that failure into strength, strength into pullback, and you know the drill, back down to retest that low. At the same time here, what if we go sideways in the short term, right? What if we end up bouncing here and we see the market going sideways? What's the plan then? Same thing, sell at resistance. One try, two try, failure, back down in. So watch out for that. Watch out for that trading range. If we do see it start going sideways here, if we see double bottom on this, up, one try, two try, failure, back down, or breakout pullback through those lows, right? Breakout pullback to the lows, second try, failure off the highs, if we get a range-bound market going into tomorrow's session. What if price keeps going lower? Hopefully price does keep going lower. I would like to get some separation away from this naked reversal line. If price goes lower, then I'm going to look at this almost identical like the S&P, and I'll look to get that reversal line for a sell tomorrow. So hopefully price does go lower in all reality because that will give us some separation away from that reversal line. I want to get some good separation away from it. If we do go lower though, remember, we got that minor measured move right there. So if we push through it in the overnight session, that will tell you where we're really going. If we push through that minor measured move in the overnight session, then you know where we're looking, for that big measured move. If that's the case, then it's free game here, Fair game, sell above that high. Again, selling at resistance. If we see this market keep chopping lower, and we're not seeing a pullback on this, then we start looking for traps. We can get a little more aggressive with that trap high on the way back down to that low. If we go lower here and we bounce off of this measured move, remember, two-legged pullback up into resistance, buyers try to hold, failure, and back down we go. Okay, so just kind of watch how the market reacts to that minor measured move at 74.5. Again, my gut tells me we're going down to that bigger measured move, but my gut is not my trading strategy. There's a reason why I use rules that have been proven to work over a long period of time, You can't trust your instincts, especially when you've got risk on the market, We make horrible decisions when there's money at risk, So don't trust your instincts, don't trust your gut, It's difficult to learn to be a trader because as human beings, we're already hardwired genetically because our grandparents and their grandparents and their grandparents passed down things, that were essential for our survival. Well, those survival tactics don't work very well in the financial markets, and we have to learn to think more like a trader rather than thinking like a human. So if price keeps going lower, watch the bounce off that measured move, watch those trap highs. Let's see here. How do we reverse? Strength, pullback, strength. Reversal. Yep. Strength. Pullback. Again, watch if that pullback fails because it will collapse back down in. Strength, pullback, and then strength. If those buyers start showing us a lot of strength going higher, sounds good to me. We'll draw up that new channel. Usually when a market reverses, you have to use a hidden channel like that off the highs, and you got to be real quick on it because it will pull back, a little shallow pullback, and then blast higher back to that 69.15 area, right, to get that retest of today's high. Got a big opportunity here to the downside tomorrow on the E-minis. If this continues to go lower, just make sure, again, don't worry about how far this will go. You're wasting your energy on that. Worry about where can I get in at resistance with a small amount of risk and a big potential reward. Now, the award for the most difficult market for Friday's session is... it's going to be the gold. Gold is not going to be an easy session to the upside tomorrow. We're bullish right now, right? We are bullish with a flag pattern. That tells me to look for buying opportunities up above the highs of the flag on strength, or seller failures down at the low of the flag on weakness. The challenges, the prior week high and the measured move are right there as resistance, which are going to make the buyers a little bit nervous. It'll make their job a lot more difficult tomorrow. Honestly, with all the resistance levels overhead, with that prior week level, the top of that bear channel, the measured move just an inch or two overhead, I'd rather be a seller. But we haven't seen any proof of the bears taking control, so I'm staying patient to wait for proof before we go looking to sell this market. This is one of those classic scenarios, we talked about this a few weeks ago, where the buyers are almost a little bit boxed in right now. They got that prior week high, right? They got that channel high. They got the measured move overhead. The only real way we can be a buyer on this is if we see a lot of strength going back up to retest that high. And even then, it's going to be difficult to get into this market. Most important thing to be aware of is that whenever you see a strong move in one direction, right, we normally see a two-legged pullback and a retest of that high. Well, the reality is sometimes the retest of that high doesn't quite return all the way to that high, and it fades off the high. That creates a falling resistance trend line. Then, if this doesn't collapse, if we don't collapse going lower from there, right, oftentimes that collapses. And when it collapses, you know, right, the buyers are walking away and it's bearish. And what you want to do is draw that hidden channel, right, and find that sell off of that, right, hidden channel. But again, right, if we don't collapse and the market kind of stalls out here now this becomes a channel. The problem is that this is not a bear market yet. It's still a bull market. We just haven't seen the buyers successfully return back to that high. So now we got some problems, right? We know the buyers, they want to go back and they want to retest that high again, right? But the problem now is they've got that falling resistance trend line overhead. So what happens is you've got to be careful here. There are two ways to trade a flag pattern. This is what it is, right? It's a flag pattern. It's a bull market that's failing to retest the high but hasn't turned bearish yet. So two ways to trade it. One is below the range, below the channel. The other is above the channel. Now, these are tricky. First one is we want to get back below that channel and look for sellers to try and fail on weakness at that low. This is by far the most lucrative of the two opportunities, but it's also the one that takes the most amount of cojones, right? It takes some balls to really buy the low of that channel. This is really, really difficult. Not an easy trade to take off of that low. And then you've got the most difficult, right, for technical reasons. As we go back above that high, we don't want to buy into that high, right? We don't want to buy into that high. We want to buy off the high. So what I like to do is I want to see a lot of strength going through that high and then look for that strength and then pull back and buy off the top of that channel. So that's ultimately going to be the big plan for tomorrow. Now remember, at any point, if this thing collapses and falls through, it becomes a bear market. And it will usually move real fast. So as you can see here, we just got that seller weakness at the lows, right? There's your failure at the low. Okay, so that's behind us there just for the closing bell this afternoon. Now we want to go up. Got to be real strong move higher, and then try to buy that pullback right off of that high. This is not going to be easy. because of that prior week high. Remember, as we go into the end of the week, last week's highs and last week's lows, they become real sticky price magnets. So it's going to be difficult to get the buyers to want to put risk on up above that channel high. So it'll be very, very important tomorrow. We see a lot of strength going higher because that will give buyers a reason to buy the pullback. If this thing barely pokes its head above that channel high, it's going to get slapped right back down again. So my plan for tomorrow ultimately is I'm going to try to participate in this move off the pullback. But I'm telling you right now, though, the easier way to do this would be the failure back down. That would be the failure back down. Once you see that failure back down, right, now you're drawing your new hidden channel, right, and now you're looking to sell. Get that up. Right, that failure back down, right, new hidden channel, right, and now you can go out, find that new hidden channel, right, and sell the sucker back down to that low. That would be much easier. It will take some time because obviously we're not bearish yet. But hopefully, while we're sleeping tonight, hopefully the bottom falls out of this thing and we can kind of free up open space. Again, I can't sell it yet. Okay, so scenario one for the buyers, up, strong move up, pull back and hold. Okay, another scenario would be up, pull back, collapses back down in. If it collapses back down in, it's almost guaranteed to be bearish. Make sure you see that big move, right? It'll likely do something like this. Mark up those lows, the lows, right? And that's going to give you that green light, right, to be a seller on the way down from there, right? Maybe we don't even go higher. Maybe it just collapses, right? If it collapses off that, then obviously now, right, we'll line up low to low, high to high, selling up off that high, right? So if we do collapse, I'm going to find as many different variations of that hidden channel I can find. And then again, where can I get in at a level of resistance that allows me to sell at resistance with a big wide open space, right, for a target below? Where's the weekly low? Yeah, the prior week low is right down at 1309. So prior week high, we could rotate down to that prior week low. Again, the plan is pretty difficult to the upside right now. Much easier if we can get these buyers, right, to give up. Now, one more scenario. What if we go back up and retest that high? If we go back up to retest the high, we have one of two scenarios to watch for. If we go back to retest the high, if we can make it to retest the high, then we start watching for one of two scenarios. One scenario would be a range. Back down to the low, look to buy off that low. Second scenario would be continuation. We break through the high. Moving average comes over, right, and we're buying pullbacks from there. Just make sure you get that. Again, like I mentioned earlier, we're going to see a lot of strength going higher here if we're going to get confidence going above the prior week high, right, and again, getting through that level of resistance here overhead. There's definitely potential the buyers take this, but be very, very careful in this area up here because, again, it's going to be riddled with sellers trying to fade off this high, and buyers will most likely be a little bit intimidated, right, by buying into that level of resistance. Is it going to be easy? Absolutely not. I hope we see that big drop off the highs. Hopefully we get that reversal tomorrow. Again, going to be a challenging day here to the upside tomorrow unless we see a lot of strength in that short term. Let's keep going. We got the hard stuff out of the way. Let's wrap up tonight on the easy one. How about some euro? Euro is bearish with a spike in channel, a support trend line, and a hidden channel on the chart this evening. The bears have control, and this support trend line just got broken below. So I'm watching for selling opportunities using a two-legged pullback pattern off of resistance levels, waiting overhead for a move back down to that prior week low. Here on the euro, we can see that prior week low is staring us right in the face. We have to assume that's where those bears are trying to get to in the short term, although we have a big measured move, that measured move waiting right down at that low, right, that low from earlier on in the week. At the same time here, I get a strong move down, pull back, lower low. There's my spike in channel. I'm also lining up that low to this high to create a hidden channel, right? Beautiful level of resistance, right? How far will we go? Doesn't matter how far we're going to go, right? All that matters is where can I get in that I can leave a runner, right, and try to get as much out of the move as I possibly can. I think one of the key components here is this trend line. right? This rising support trend line, 1, 2, 3 tests. Anytime you see a trend line like this with 3 tests, you've got to take it seriously. The good news is we're now below it. So what I'd like to do is go up and sell off of that trend line using what we call a two-legged pullback pattern, right? One leg, two leg, and then back down, right, into that range going lower. Okay, so what if price goes higher? Price goes higher? Absolutely. We'd love to use that trend line. We'd love to use these levels of resistance overhead, right, to be a seller back down again. What if the price goes sideways, right? What if it goes sideways? We come back here, we pull back, right, bounce off it. What if we go sideways here? If we go sideways, and how do you know we're going sideways? Double bottom at that low. If we see a double bottom at that low, we turn sideways here, looking for those failures. One try, two try, back down in, right? One try, two try, back down in. Easy to see that if we go sideways. What if we keep going lower, right? What if we keep going lower here? What if we keep going lower? Well, if we keep going lower, now what I got to do is again, keep waiting for that opportunity now. Draw it like this, right? Keep trying to get that move up off that low. Failure, strength, pull back, and back down we go from there. So again, even if we do go lower, right? Even if we do go lower, I'm still going to focus on selling up at resistance. So stay patient, wait for that pop, because you can see every time the market got back above that moving average today, sellers are waiting to sell it back down. That's my plan here for tomorrow's session. Up, down, sideways, up, down, sideways. Make sure you're ready for everything, right? Up, down, sideways. And of course, how do we reverse? Is it possible? Absolutely, it's possible for reversal. Starts off with strength though. Strong move higher, pull back to the moving average, strong move through. Anytime we see a reversal, I like to look for a hidden channel. Hidden channel. This is, of course, not trying to scale, right? Buy off that low. Target, of course, that points back up, right, to retest that high. Beautiful opportunities setting up for Friday's session. We got a bunch of strong trends, but with those strong trends, we're focused on not how far we'll go, but where can I get in to participate in the most reliable way possible. You want to learn more? If you want to learn more about our trading strategies here at School of Trade or all the techniques we use in our trade room, I got a great free trial, a free trading class here on our website at schooloftrade.com. I'll put all the links in the description of the YouTube video, so follow those links to the website here at School of Trade. While you're here, don't forget, learn more about our beginner, intermediate, and advanced classes, and I'm always here to answer all your questions 24/7, 365. Tomorrow's a Friday. Excellent work so far this week. We got one more day of learning and earning to go tomorrow. I will see you guys tomorrow morning. If not, same time, same place on Monday evening. That's right. I don't do the newsletter on Friday evenings, right? I'll see you guys back in our newsletter next Monday. If I don't see you guys in the trade room, have a great Friday session. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.